Guys, stay in your lane. I'm going to talk about what that means and what just happened to Justin Bieber, Tom Brady, Giselle, and even so-called smart money like hedge funds when they try to go out of their lane of expertise. The fallout from crypto and NFTs in general and the FTX bankruptcy in particular has some good lessons you can learn from. Will most people learn these lessons and not do this in the future? Some might, but history shows us that people love to believe a pretty lie rather than an ugly truth. So let's start with Justin Bieber. Justin Bieber is reportedly worth $285 million from singing the words and music that other people wrote. He has been doing this since he was a teen and is very good at his job of being a singer slash heartthrob for teen girls. What he's not so good at is trying to be an expert in crypto or NFTs because he paid $1.3 million for a Bored Ape NFT a year ago that is now worth about $70,000. Now, he may have bought this to promote his latest song or even got it at a discount or for free, just for the advertising that it would create and entice his fans and others to buy NFTs. So this loss is not going to put him in the poorhouse, but his time and effort is much better spent working on his singing career. So if you see some kind of influencer or famous person like this going outside of their lane, don't follow them off the cliff. Now, I don't follow sports, but even I know that Tom Brady is a guy that gets paid a lot of money to throw a ball better than most people can. He gets paid very well for it and also gets many commercial endorsements from it. He should have stuck to what has been working for him all these years. And if you listen to him talk about crypto, it sounds to me like he knows very little about how it really works.
Have you informed the Buccaneers you'd like to be paid in Bitcoin? You're into Bitcoin and you've guessed right at times. And I guess recently you haven't guessed quite as well. And you're starting to get involved with your own exchange.
Yeah, we're talking about cryptocurrency with the quarterbacks all last season. I mean, literally for the last 12 months, we were talking about Bitcoin, Ethereum. You know, it's fun for us to think that sometimes we're financial wizards as well as quarterbacks. But
are you?
I'm learning. There's a lot to learn in these kind of emerging spaces and emerging technologies. Again, I believe that the future will take us in a lot of different directions. It's certainly not going to take us backwards.
And I'm sure he knew even less about how FTX really works. Yet, that does not stop him from being the spokesperson for FTX and getting so many people to sign up because of his association with FTX.
What do you think? Are you in?
You know what? I'm in. Let's call everyone.
Okay, I'm in.
Yo, what's up? Yeah, I'm in.
Yeah, sounds good. I'm in.
I'm in. Hey, Arthur, I quit.
I'm in.
Doggy coin? Sue, Mark.
Are you in?
I'm in.
I'm in.
I'm in.
Now, I see a lot of articles saying that Tom and Giselle are worth about $650 million and that they put most or all of their money into an FTX equity stake. I don't think Tom is an investing genius, but he is not an idiot either. So I would bet that the investment stake was either given to them for the advertising benefit to FTX, or they invested some small amount at a very favorable valuation. This Tom and Giselle investment in FTX was a big part of the FTX story that they were pushing out there, that they believe in it so much that they invested their own money in it. So I got to believe that it was more like part of their pay as spokespeople for FTX, kind of like companies giving stock grants to employees. Either way, Tom is not having a good year with his divorce from Giselle, but now he is getting sued along with Larry David, Kevin O'Leary, and others. So he went from being loved by many fans and FTX investors as long as crypto was going up, to now potentially facing a backlash as people blame him for their losses on FTX. As for Giselle, She won the genetic lottery and has been cashing in on it for years, rightfully so. I don't know her level of expertise or faith in crypto or FTX, but I would guess it is even less than that of Tom Brady. I don't know if you remember this, but she was the poster girl for buying the top of the euro back in 2007. You see, back then, the euro got very strong against the US dollar, trading about 145 to the dollar. When this happened, she famously demanded that her clients now pay her in euros because the dollar was going to keep going down, according to her. So here's a chart of the euro to the US dollar. And here in November 2007 is when she made this demand, when the euro was about $1.45. Within 8 months, it peaked at about $1.60 in July 2008. And now we are here at basically parity. And so that is a 35% drop on those euros that she got paid if she was still holding them from 2008 to now. Now, celebrity finance influencers wasn't a thing back then. But if it was, I'm sure some foreign exchange brokers would have hired her as their spokesperson and chief currency strategist back then, right? Either way, the lesson is stay in your lane. Put on fancy clothes, walk down the runway, smile, and collect that check. Now, Kevin O'Leary is involved with FTX as a spokesperson, and he also has an investment in them.
If there's ever a place I could be that I'm not going to get in trouble, it's going to be at FTX.
I am a paid spokesperson for FTX, so I have a lot of respect for the management there. I did a lot of due diligence before I accepted that position. Sam is one of the smarter guys in this space for this reason. Long before crypto, he was a trader. He understands the power of leverage, both to the dark side and the upside of performance. So I'm going to guess, and it's a personal opinion, the last guy to blow up is going to be Sam Bankman-Fried, because he doesn't get himself caught in over-levered positions.
Now, Kevin is considered an expert in finance. He has his own line of stock ETFs named after him, but I doubt even Kevin really understood how crypto works or how the web of 130 or so entities of FTX worked. Anyway, I would give him a pass on being a spokesperson for FTX. You see, before FTX, he would record messages for people on the Cameo app for like $1,200 to push what seemed like just about any business anybody asked for.
What Kevin O'Leary is doing on Cameo is charging $1,200 for business shout-outs for any business that you want.
And that's what Trading was all about. Millcroft Lawn Care, Prunosa. It's a website that personalizes and helps you grow your business. It's the only app where your kids can track their chores. You know, look, please call Anthony or visit his website, www.burlingtonlawncare.com. Now, if you're a plastic surgeon, you're going to want to hear me on this thing. I'm shouting out for a service called Plastic Surgeon Ad Experts.
So I don't think he got duped. I think he was just selling his brand for another endorsement as long as the check cleared. So if you got into FTX because of Kevin Leary and you didn't know the kinds of things he will endorse for money, that's kind of on you. So really, Kevin didn't go out of his lane. Endorsing just about anything for money is his lane, and you should be aware of that. So now, didn't some of the smart money like hedge funds also get caught up in this and kind of out of their lane? Yes. You see, a hedge fund is just someone like Tom Brady or Justin Bieber in a nice suit standing in front of a Bloomberg terminal. They can be fooled and suckered into the hype like anybody else. So how did they get suckered in? Well, they did not want to be seen missing the boat on what is advertised as the next big thing since the internet. So these guys who are older and probably don't understand how most of this stuff works defer to crypto geniuses to let them know that they have to get in on this. And it's also a form of advertising for them to get some new money clients. Let's see what an article says about it. So this article, an institutional investor says, how did so much smart money get tangled up in FTX? And so they say there was plenty of smart money along for FTX's wild ride, including Sequoia Capital, SoftBank, of course, Tiger Global. So the smart money got caught up along with some of the dumb money. Ontario Teachers Pension Plan put $95 million in there because I'm sure the board of the pension plan are all crypto geniuses, right? So all told, these investors plowed in $1.9 billion into FTX since just 2019. Sequoia says we're in the business of taking risk, even though they now wrote down their FTX investment to zero. And they say they do extensive research and thorough diligence on every investment we make. But critics scoff at that notion. The many crypto investors, enablers, and legitimizers weren't seduced by FTX and SBF. They were just willing to accept whatever a billionaire with a vision said without doing the most basic due diligence or asking the most obvious questions if they thought it would make them rich. That goes for hedge fund guys, and that goes for guys sitting on their couch on their Robinhood app or whatever. And this guy, CEO of Better Markets, said his firm had been offered 7 figures by FTX, but his team met with FTX and SBF. And when we asked tough factual questions that were not answered satisfactorily, it really didn't take much to see that there wasn't much to that vision other than hope, smoke, and the desire to make a quick buck. However, potential investors who asked pointed questions were told, take it or leave it. Bernie Madoff did the same kind of thing. He said his fund was closed and people would have to beg him or say, hey, I know this guy who knows this guy who knows you. Can I get into your fund? And other people said they risked losing their jobs by talking their firms out of investing in FTX. You see, so these firms wanted to believe, and anybody who tried to say the opposite was really putting their job at risk. So either go along or leave. FTX caused me real pain last year. From my day job, I was able to kill an investment in the company, but doing so almost cost me big. And Herb Greenberg said, what I learned doing research and dealing with hedge funds is that while everybody gives lip service to originality and research, in the end, they prefer to be where their pals are, assuming they did the work. So you see, even the smart people at the hedge funds could get caught up in this, and it's no different than regular people when they say, look, I don't want to think about how Bitcoin works or how these 130 companies in FTX combine and are worked and how they could pay out 8% interest on made up currency and all of this stuff. I'm just going to look at this smart guy, Kevin O'Leary or Mike Novogratz or Michael Saylor or whatever. Those are smart guys. And if they say that it's good and they're investing, then I'll just go along with that. And that's kind of what the hedge funds did as well. So you see, it is a lot like the story of the emperor has no clothes. Even those who had questions or suspicions were pressured or told to shut up because these investments were a foregone conclusion, whether their due diligence pointed out red flags or not. Anybody doing any due diligence on FTX, in my opinion, only had to look at this corporate structure of FTX. Just looking at all the subsidiary companies, LLCs, all these different divisions and all this stuff, nobody could make heads or tails of this. As a comparison, this is the corporate structure of Lehman Brothers Holdings, which also went bankrupt. And at the time, this was considered a lot of companies and holding companies in a strange structure. And so that's kind of how it goes. If you can't dazzle them with brilliance, you baffle them with bullshit. So the more questions they ask, the more you talk about AI this and DeFi that and staked this and unlocked that and non-permanent loss from market-making AI bots and all kinds of stuff until people just glaze over and they go, okay, you sound smart, take my money. So when you question how many people did not see the red flags and all of that, It reminds me of this quote from Upton Sinclair in the book The Jungle. It is difficult to get a man to understand something when his salary depends on his not understanding it. So Zero Hedge is saying that SBF bought a lot of news organizations so that they can do puff pieces on him, along with the people he paid to do the ads and influencers and all of that. And so in a New York Times article on Monday, they did a puff piece on SBF where they didn't mention any of these allegations. This is the number of times they mentioned fraud, Enron, crime, illiquid, stolen, hidden, criminal, backdoor. None. But they did mention he's sleeping well. Okay, so that's good to know, right? And here they say SBF gave millions to corporate media outlets, according to Tablet. So SBF cultivated the media lavishly, if not carefully, drawing on what then seemed like an unlimited pool of cash. He dispersed investments, advertising dollars, sponsorships, and donations to key news outlets, including ProPublica, Vox, Semaphore, and The Intercept. So if you're the CEO of a cigarette company, there's no way you can understand that cigarettes cause cancer. If you're the CEO of Coca-Cola, there's no way that you can understand that Coke may lead to diabetes because you are getting paid to not understand that. So this is how it works with these celebrities, the news media, and YouTubers that get advertising from companies like FTX. If they are paying you to say good things about it, you will not look for the red flags. And even if you see some, you will ignore them or discount it, just like the hedge funds did. This holds true for crypto and many other things. It goes with anything that people are trying to get you to buy or invest in. Look around you. If the average person is buying or investing in something because famous people, sports stars, or influencers are being paid big money to push it, they are probably going to be losing money soon. Stick to what you know and stay in your lane. It took you a long time to get very good at whatever your skill or profession is. It is not logical to think that you can shortcut all those hours of learning and just invest in something you saw in a Super Bowl ad or TikTok video and make easy money. The world doesn't work that way. The sooner you learn that, the better off you'll be.